I think a big component of of any opportunity we look at is liquidity, right? And we tend to look at things, or when we issue a position, it's typically a token that is not yet listed on one of the major exchanges, and that's part of the kind of the alpha generation strategy, I would say.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Feyo, thank you so much for joining me today. Super excited to chat with you. All right, Feyo, you're the co-founder and managing partner of Florin Digital, a liquid digital asset fund. You guys manage over 20 million in AUM, focused exclusively on liquid tokens. Previously, you were in TradFi at JPM, Oxif, I think I said that right, which is now Sculptor, Target Global, where you were head of digital assets there, and you were VC at Fortino Capital. All right, so I feel like, you're Dutch, right? And I feel like Dutch people, they're just like pre-programmed to be intrigued by like markets and new forms of commerce and whatnot. And I feel like the Dutch are overrepresented, or in a good way, in crypto. Do you feel like being born in the Netherlands, you're just like imbued with this sense of like, all right, I want to do some exciting things within like new markets and whatnot?
Thanks for having me on, Andrew. Super excited to have this conversation. It's funny you say that because I am 100% Dutch, but I was both my parents are Dutch, but I always grew up abroad. So to my Dutch friend, I'm probably the least Dutch, kind of person or friend they have, and vice versa. For my non-Dutch friends, I can come across as very Dutch. So I'm a little bit of a hybrid creature. I think. In terms of Dutch people in crypto, there's a few there are a few people. I wouldn't say they are disproportionately represented. At least that's not and maybe that's my bias of not wanting to hang out with too many Dutch people and having more of an international view. But I think they're fairly represented, right? And to your point about commerce, that's there's a little bit of a hoodwink, and also in how we came about to choosing the name for Florin Digital.
Yeah. So yeah, tell me about that. Florin, I believe, was, you're going to correct me here, but it was like a currency used in Italy, I think.
No, it was actually it was a at one point during the sort of 16th and 17th century was a global reserve currency. It basically was so it's the Dutch guilder, which before. So today, the US dollar is the global reserve currency. Prior to that, it was the British pound. And prior to that, it was the Dutch guilder or the florin.
Oh, so the Dutch guilder is, why is it called the florin then? Because I've heard of the Dutch guilder, but the florin is another term for it.
Correct. Yes. It's like sterling and pound, kind of, and it's because it originates from, the original, the Florentine coin, which is indeed an Italian, gold medium of exchange. And then the Bank of Amsterdam, which was the first central bank of the world, said, why don't we take custody of these gold coins, and we'll issue some depository receipts against them, and then you can use those receipts to kind of trade and go about your business rather than have at the exchange bags of coins, for example. And so we see an analogy or kind of a similarity where crypto or blockchains aren't just they aren't just currencies. They're kind of platforms that enable global trade. And the florin, in the same way, wasn't just kind of a coin or a currency. It was kind of it kind of enabled cross-border trade in a way that wasn't possible before that time.
Very cool. Okay, so let's go a little bit back here. I believe you got involved in digital assets before Target Global, or was it at Target that you really dove deep into crypto?
Yeah, I went full time when I joined Target. So this was about 4 years ago. My sort of first point of contact with crypto was back in 2015. I read something about Ethereum and had a big aha moment for some reason. And I back then I was the CFO, or was just about to become the CFO of a scale up in the FMCG space, and sort of kept abreast, more in a passive way. I guess I didn't have the maturity or the guts maybe to sort of jump in at that point in time, even though I was fascinated. But I got a nice job offer, let's say in TradFi, and at that point it was nice to be able to say like, oh, crypto is more of a side thing, and I'll stick to the real world for the time being. I had a similar moment actually 3 years later when I joined another scale up. This time was a biotech, also as a CFO. This is sort of 2018. So on the back of the ICO boom, and also like I had sort of been I had read a number of in 2016, 17, you read a number of ICO white papers, totally drank the Kool-Aid, thought this is the next best thing to sliced bread. But again, I didn't have at that point. I didn't have the structure in my and the clarity of thought to say, okay, this is now the time to sort of go full time into crypto. I should have done that. I think that was a mistake in hindsight. But remained in TradFi for a number of years until I joined Target, which was my sort of first full time job in crypto.
Very cool. And so at Target, were you, and Target is a VC, or is it a asset manager? What is Target?
Correct. They're a pan-European VC, so they have a big office in London, Berlin, and Tel Aviv. They have multiple funds across sort of early stage venture, late stage venture, and they had at that point made a number of pretty significant crypto-linked equity investments, mostly infrastructure themed. So they are the largest investor in Copper, the crypto custodian. They'd invested in a fiat crypto on and off ramp. A bunch of investments like that, and we're looking to launch a dedicated crypto fund. And I I was introduced to them through a headhunter who, and they were actually looking for, because a CFO. I knew I no longer wanted to be a CFO. Wanted to go back to the investment side and also go full time into crypto. But I took the call. Said they're a good fund with a good rep. So let's see. And so halfway through the recruitment process, when I figured out that there might be kind of some offer at the end of the tunnel, I sort of said, like, hey, I actually don't want to be a CFO, but you mentioned something about, wanting to launch a crypto fund. I think I could help you with that. And so I pitched to them that if they were to do it, they should launch a token only fund, open ended, in liquid markets, because that's where the opportunity lies in crypto and the real innovation. And I guess they were sort of crazy enough to say, okay, why don't you come and do this? So that was a very exciting move, I must say.
That's amazing. Wow. So I feel like normally the way that those stories go, where you're like, yeah, I was at this firm and try to convince them to do X, Y, Z, it's always like, and they said no. But I'm very surprised that they said yes. That's incredible. And so then after Target, you were at Fortino, which is another VC, right?
All right. So actually, when I joined Fortino when I left Target, and that was also when I started Florin Digital. So I used to be based in London, moved to Amsterdam, and with that move, sort of launched Florin Digital, and also became an operating advisor at Fortino, where basically I do kind of two things. One is, so they're a more they're a traditional venture and a PE fund. They back B2B software companies exclusively across Europe. And I do two things. One is because I'm a prior operator, prior CFO. I help their PE companies, hire good people in finance, structure their finance teams, those kind of things. And the other thing is on their in their venture business, they have some sort of Web3 related investments. They don't do a ton there, but occasionally there's a deal that we'll look at together, or I'll help out on.
Very cool. And so you decided, okay, I've been, CFO, I've been involved in markets, whether it be VC, crypto, et cetera. I want to launch Florin. Take me through that initial thought process of okay, you said yourself, liquid markets are the best opportunity within crypto. Like, why did you decide liquid versus VC, which I feel like, I don't know, I feel like VC is also a pretty popular option, and being early in crypto and having access is, there's really outsized returns there as well. So tell me your thought process around deciding on the liquid structure versus a traditional venture fund.
Sure. So I think one of the unique characteristics of our asset class is that you can do early stage venture investing with liquidity, right? And so we saw an opportunity to, on the one hand, create a better investment process where we can get involved, in the very early stages. So once a protocol or a company has launched a token, typically it's still very early days. You have a very young team. They've barely found product market fit, but they have a token that's listed and you can buy and sell on on the open market. Um, but at the same time, it's still you have you can target basically those venture like returns, but you're looking at a real product that throws off metrics, right? It's not just a PDF and an idea. And so there's an element of risk management that you can apply, I would say, that you cannot in a private context, right? Because in a sense, in a private context, you source an investment, you make the investment, and then you're kind of married to that position, right? For better or for worse. You can risk manage in the sense that you can do your best to help the team with your connections, with your knowledge, et cetera, et cetera. But at the end of the day, if the team is going in a different direction than you had originally agreed on, there's sometimes you could do something about it, but it's often difficult because you invest with minority stakes, et cetera, et cetera. And in crypto, you're investing in these early stage businesses. They have a token, and so we always look for a very complete alignment with the team when we invest. But for whatever reason, it can happen. Happens all the time. You're no longer on the same page, or a team wants to go in a different direction. And I wouldn't say that we then have the option to press a button and and sell the position, but at least we have options, right? It gives us optionality, and so I think you can apply an element of iteration and risk management uh, on the way up, right? You're not looking towards working towards a binary exit moment, and at the same time, if you were wrong because your thesis was wrong, or something like that, you can trade out of it. And so I think that's something that is you can't do in other asset classes. And so that's something that we wanted to combine, venture and liquid markets. And liquidity, basically, and at the same time, we think it's a better proposition for LPs, right? Because a lot of the crypto capital is raised today is venture capital has been raised into closed-end structures. Your money is locked up for at least 10, 15 years. But often they don't always have a very clear or sort of super defined mandate. They will invest in sort of liquid, semi-liquid opportunities, tokens, and we think that that does make a lot of sense, in the sense that you can ultimately, if the underlying is liquid, you should be able to provide at least some of that liquidity also to your LPs.
Very cool. Okay, so the overall investment philosophy, if we had to summarize it as like a one liner, Florin Digital, we kind of focus on this, or we believe in this. What would that one liner be?
Um, Good question. I think um, we're essentially looking to partner with early stage teams, building a protocol that we think has a reason to exist in 2, 5, 10 years time, and where we have a team that is building for the long term, right? I think that's one of the big risks in crypto, is that it's investing in tokens doesn't come with the same investor protections as as you have in equity, for example. And at the same time, because the liquidity profile is very different too, you have teams that become, let's say, monetize their success fairly early on, even sometimes before the underlying product has gained kind of notoriety or success. And so I think where we can, investing in teams where we can find a strong alignment, and that means, you know, we take cues from them and they take cues from us, and they allow us to help them on things like tokenomics, BD, investor communication, those kind of things. I think you have a lot of protocols that come to market, so to speak, and then they're building something great, so they're technically very proficient, but they have no clue about how to deal with a token, capital markets, investor comms, those kind of things. There's sometimes often very little business acumen, and so there's a big gap on the BD and sort of an IR side of things, and that's where we have take a view, and if protocols are keen to sort of work with us on that, there's typically it creates a good situation.
Very cool. So it sounds much more active versus some liquid funds, which might be, for example, like purely quantitative. They don't really interact with the team whatsoever. They might just be purely focused on the numbers and the market movements. You guys are, yeah, I think you said it. You said liquid venture investing, essentially, where it's, hey, this is a great team building a great product, which we think the market's going to grow massively within this product. Therefore, let's make this bet. And you guys partner with those founders in order to, once you guys have your, investment, help them talk to other folks that might be liquid hedge funds or venture investors, whatnot, and to hopefully get excited about the same opportunities that you're looking at. Is that kind of a rough way to say it?
Yeah, that's right. I think a big component of our um, of any opportunity we look at is liquidity, right? And we tend to look at things, or when we issue a position, it's typically a token that is not yet listed on one of the major exchanges, and that's part of the kind of the alpha generation strategy, I would say. But then we have to make sure that if the thesis works out and we're going to exit the position after if we reach our target price or after passage of time, there needs to be enough liquidity, right? And so um, these assets, because they're so niche and because price discovery is so inefficient, especially kind of in the early stages, they more liquidity means more efficient price discovery means kind of typically token price will also go up if the underlying product and obviously the market conditions are kind of working in your favor too.
And are you guys focused on a certain subsector? Like, for example, like, DeFi? Because I heard you say metrics, like real metrics. Not that other things don't have real metrics, but right now it seems like the subsector that has just had continual usage since it's dawn has been DeFi versus, gaming and NFTs and et cetera. They've been ebbs and flows for sure. Meme coins as well. So what do you guys focus on a subsector, or you're like, no, we want to focus on products with recurring usage that fit this profile, or what's kind of the target investment here?
Yeah, I think our heritage is DeFi. James, my co-founder, is also has a background in TradFi. We've both been operators and investors, and I think we're so part of what I mentioned earlier. We have this operating background, and that's also kind of why we have this active component baked into kind of to our approach. I think if you look at what themes do we focus on, we started with DeFi because that's what we understand. James has a big background in credit, and so I think we had especially kind of post DeFi summer. There was a lot of technical innovation, but often without regard for basic laws of corporate finance or economics. And so I think we were able to spot interesting opportunities, good and bad, based on people sometimes completely ignoring kind of how to underwrite credit, for example, right? So I think people were sort of enamored by the technological innovation and how to go about how to build a money market on chain, for example. But then if you don't have the appropriate risk metrics and kind of the parameters in place to kind of accurately price credit, then you're bound to have a blow up or a big issue down the line. And so I think it evolved from sort of infra and DeFi into it still is infra and DeFi with a big flavor of AI, I would say. And within that, again, we have a kind of two-pronged approach. We like stuff in the application layer, so we're big on AI frameworks, and also a bit the infrastructure. So we did a ton of work in terms of trying to understand where the tech stack or where in the value chain value would accrue most to in the AI tech stack. And I think on the infrastructure side, we've written a lot on our blog about co-processors and TEs, and we see that technology playing a big part in how we run agents in the future. And then in terms of spinning up agents on a blockchain, and maybe we'll get into that at some point. We think that the framework bit, kind of the platform that ties it all together, kind of the token, the underlying model, the front end apps the agent integrates with, is very interesting.
Very cool. Okay, so there is no specific subsector, because you mentioned infra, DeFi, AI, et cetera. Just
Well, I'd say that's it, right? So we're definitely we're not into gaming. Um, None of us are avid gamers, and I don't think we'd ever be able to create an edge there. Um, and I'd say are there other no-nos? And I think deepen is something we look at. We There are some very interesting experiments out there, and in a way, the deepen projects are some of the the most tangible products to understand in crypto. So I talk a lot about them when I talk to LPs because whenever you get the question like give me a real example, I think kind of a you know take a decentralized storage network, for example. I think that's something people can wrap their heads around. But we haven't necessarily invested in a big way in those, but it's something we sort of keep an eye on.
Makes sense. And then for sourcing these opportunities, you did say that ideally you're finding these liquid opportunities pre major exchange launch. And so how are you, yeah, how are you finding this? X and Telegram and just talking to folks and trying to, find who's building the next exciting Aave or whatever, or how are you sourcing these different opportunities?
Yeah, I think it's a bit of both. In the sense that um, we do big screening exercises occasionally. This is more of a kind of a um, to double check that we haven't missed anything. But we sort of favor a bottoms up approach where yes, through our network, connections on Telegram, being in the trenches on Discord. I think what we do in the first place is we pick themes that we like. Verticals, take AI infra, for example, or AI application layer. And then within that, we start looking, quite in a fairly targeted way. And then I think because we invest in liquid markets, you know, we're we're not so much in a rat race as you would maybe be in a traditional venture context, right? We have maybe a bit more time to sort of look around, see what's there, and then we try to figure out what has a real underlying product, with a token that with a ideally kind of a very simple kind of value accrual model, or philosophy, and then we sort of tie that to obviously the team. I think the team is hugely important, as it always is, right, in any venture investment, but particularly here, right, because there's again, as I mentioned earlier, a token investment doesn't come with the same protections, and so how can you be sure that the founder will just stick around, or if this thing doesn't work out, is he or she going to stay in crypto? I think those are all questions that we spend a lot of time on. And so the last but not least is, tokenomics play a huge part. And I think that there have been, yeah, many things to say about tokenomics. Don't want to open a can of worms here, but obviously, there are, if you look at, protocol or token dynamics over time, there have been assets out there. Take Lido, right? I think Lido, roughly, is it sort of summer 2022 to summer 2024, market cap wise, flat basically, but the token price went down by 50 to 60%. So basically, kind of the circling supply increases over time. It kind of, approaches, the total supply, and, people think in their heads that sort of, market cap will converge to, fully value. And in reality, it's kind of more the other way around. Right. So I think we always look at things on a per token basis. And that's, if you're not making those calculations, you're kind of, you're bound to mess up.
It's funny. Lada's been painful just from a personal perspective, not from our fun perspective, but just I've been a huge fan and, massively bullish, and it just has not performed well at all. And I'm like, man, the team's great, the product's great, like it has real usage, and just like, so anyways, I do want to dig deep into token economics because I think that's a big factor at play here. But going back a little bit, when you're looking at what factors when you're deciding to make an investment, are you looking at that increase your conviction within that investment? And then alternatively, let's say that, ABC has been checked off in terms of, hey, we're now bullish on X token. But then you jump on a call with the team, and the team is, they're living in Mexico, like sipping, drinks on the beach. And you're like, oh, actually everything looks great, but actually we've lost conviction now because the team is just not really focused. So yeah, tell me what factors get you build that conviction, and then tell me which factors that you look at just kind of can break that conviction.
Let me try to answer your question by describing the ideal scenario. Kind of. So basically, we find a protocol, a team building something within one of our kind of target verticals. We'll always, I think, before we make any kind of investment, we will have had kind of multiple touch points with the team. And so we'll kind of make an initial investment with the commitment to sort of continue research and see how we can size up the position. Sometimes we're constrained in terms of how big the position can get from the get go, simply due to liquidity. As mentioned, sometimes, especially if you're buying assets on dexes, it's you're buying sometimes in increments, of a couple $1,000s a day, right? So it takes time to build a position, and I think once that process is running, we try to sort of ramp up interactions with the team, right? So it's, hey, how can we help you guys? And we try to understand how open they are to us kind of sort of getting involved in their kitchen. And let's say there's a few weeks, maybe months go by, we have gained strong conviction that we want to make this turn this from a 0.5 or a 1% position into a 5% position. But we can't do that with the available liquidity indexes. So at that point, we have a good working relationship with the team, and typically there is ideally an opportunity to do an OTC with the protocol treasury, for example. And the thing there is these deals are not exclusive to us, like many funds out there do, kind of private token deals. Um, but we try to get them with minimal or no lockup, right? We really value liquidity in the sense that our promise to our LPs is we have a clean product, right? We are not mixing tokens with equity. We are not mixing private investments with liquid or public investments, because the dynamics are different, the skill set is different, and so um, we want to keep the product as clean as possible. And so there, we typically are able to get into the sort of a block trade, for example, with a lockup of, let's say, at most 3 months. Sometimes they'll lock up. It typically comes with a lower discount than you would typically sign up to if you were doing a deal with a 24-month lockup. But we're happy with that because we really value the liquidity. And yeah, as you know, in this market, the market can go in many different directions, and so having the optionality to do something with your position is important. Doesn't mean we always do something. We're not active traders, I would say, or we try not to be. We're sort of active investors. Um, but when you're investing in early stage tokens, it requires a certain level of active management for sure. I don't know if that answers your question, but
No, it definitely does. What are some of the factors around the maybe you've built conviction in a token, and also having multiple touch points with the team is really interesting because not everyone will talk to the team, so that's interesting. But maybe you've built a position, but then something starts to happen, whether it be like the amount of fees that the protocol or platform generates starts to decrease, or the team is just, again, they're messing up in some capacity. What are some of those factors that will turn you off a certain investment that you've already made, or even thinking about doing?
I'd say it's mostly team related. I think the metrics, right? I came into this space with my background is TradFi, so like we're gonna check metrics and everything, and it's gonna be very straightforward. And I think ultimately that's where we're going. But it's taking longer than I expected, certainly. And so I think for us is the market goes up or down, usage of the protocol. I think we want to see, ideally, that'll be volatile, but we want to see some kind of underlying trend. Ideally, that's saying, right, this is going in the right direction, right? And Rome doesn't get built in a day. So I think we sometimes, you can easily become very impatient as a liquid market investor because, token price is going up or down, it's testing your conviction every single day. But really the idea is that just take a step back and say, okay, this is ultimately, a venture-like position. The team is building. Good things take time, and so as long as we can, measure, progress and motivation of the team. So how fast are they shipping? And I think some of our positions we have weekly calls, right, or at least once every 2 weeks, and I think you get to know them and you get a good sense of if you have good people judgment, you get to know you understand where they're going, their level of commitment, and I think that's probably the most important factor that we try to monitor. Um, all the other stuff is important too, but it'll drive you crazy. because there's not always a rational explanation for why stuff is up or why stuff is down. So I think that's the challenge we have is we built we have a venture product. We believe it's offers better risk reward to LPs. But we kind of throw the volatility in your face, and we're dealing with public markets. So in a way, when we have our internal calls, we're talking about new positions, teams making progress, et cetera, et cetera. And at the same time, we're in the same conversation. We'll talk about macro, right? And we don't really want to, but you kind of have to a little bit, right? We can't be totally oblivious to market swings. This doesn't mean that we trade on them or that we kind of target specific narratives, but unfortunately, this market today, I don't think there are many investors like us out there today. And our bet is that there will be a lot more in the future. Today, a lot of people are quite short term and kind of trading. I wouldn't say many people are trading on fundamentals and mostly trading, narrative and sort of event driven stuff. And I think that, kind of in the interim makes it very tricky, creates a lot of noise for us. And so we have to kind of create a construct where we sort of, get used to that and can sort of cut through the noise and say, this is, this stuff will do great in 1, 2, 3 years time.
Yeah, no, it's funny. I think if the event driven trading is your game, I think there's no better market than crypto to be involved in that. That being said, we're talking about fundamentals and kind of narrative. You touched upon that. The metrics can be kind of slowish growth, but if the team is very convicted and great at marketing themselves and talking about their product, then the narrative can kind of propel them to become more popular, and maybe the token price increases with that. So here's one question.
Sorry to cut you off. Maybe one thing to add there is we are. I mean, I think for most of our positions, the metrics are sort of up and to the right and very positive. And so in efficient markets, that would equate to better token price, right? But this is not always the case. And it's in our markets, right? Because whether people decide to buy alts or not is a kind of more of a crypto macro decision than it is today, than it is let's go find relative value in in DeFi protocols, right? And so I think that's some of the that's part of the struggle, and part of the noise we need to sort of abstract or try to abstract ourselves from.
Totally agree with that. And what I want to ask is, do fundamentals matter in crypto? Like at this stage in the game, because you said yourself, you're like, man, I thought that it would be, you essentially hinted, you're like, fundamentals would have mattered at this stage in 2025, right? You'd figure that people are investing based on, some sort of logic. And to me, at least, it feels like, and, I just had Jeff Dorman on from Arca, and he was like, well, of course, fundamentals matter in crypto, which I loved. But I'm like, man, I want to say yes. But in liquid token markets, fundamentals, I think, play a role, but not like almost a minor role versus narrative. So what are your thoughts?
Yeah, I think unfortunately today, fundamentals in isolation are not enough. Don't matter. And so my bet coming into this market was, as institutional capital or institutional participants enter this market, they will look at tokens, especially in the app layer, and see these things as equity, right? And that's ultimately, I think, why I chose to invest in tokens only. I think it's kind of the future of digital equity. They come with an economic right, a governance right, et cetera. And so I think we are slowly but surely going in that direction. But yeah, the rate of travel is much slower than I initially anticipated. And so I think today fundamentals do matter, because any kind of narrative that we kind of see appear on crypto Twitter and other kind of media initially is always driven by some kind of an indication of fundamentals, right? And then price and hype and narrative can get completely disconnected from it. So I'd say fundamentals is always like the starting point. Like, hey, there's a cool narrative. Let's buy into this kind of VC narrative. And by the way, here's some initial evidence, right? But unfortunately, I think you mentioned Lido, right? I think Lido trades. I haven't checked recently, but I'm sure it trades on a fairly reasonable PE compared to other assets in crypto. You can compare it to the assets in TradFi, and it's not getting any love based on that, right? Like, people will not own it for that reason alone, right? So I think that's where we are with with fundamentals. But I think to kind of say fundamentals don't matter is also, kind of kidding yourself. At the end of the day, we are investing in, you know, we are investing in fundamentals, right? Like, we're investing in a token. Is the underlying business cash generative? How does the cash come back to us, right, as an investor? And that's what we're betting for. Like, that's what we're aiming for. And then in crypto, you kind of have the narratives and the hype overlay plus leverage. Very few spot buyers, all very short term. And so I think that amplifies kind of for the overshooting to the upside and to the downside. Um, and that's something I've had to get used to, right? I think it's easier said than done, but I believe over time this will smoothen out.
Totally. Okay. So I think you said it great with that the tokens that the market gets excited about generally have some underlying fundamentals, unless they're like a straight meme coin, which obviously that's kind of separate, but they generally have some sort of fundamental metrics that point to cash, point to usage, point to something positive where people get excited about. And then you're right, the price can kind of get away from the underlying fundamentals, but still it's like the markets are initially based in fundamentals, and then they get carried somewhere else. So yeah. So I guess also that's why that you guys are do that function of helping the teams with BD and IR, and because you say, hey guys, like your token is doing quite well, your product is doing quite well. No one really knows about it. Can we help you, craft a message that people in the markets can relate to or can understand? And then they say, oh wow, X token is getting used a lot, and it's for good reason, because here's why. Maybe we should buy some. Is that kind of a rough like flow, or how does that work?
Yeah, I think there are, sometimes it's maybe nudging the team in the right direction. Say you should do this with your treasury, do this with your, kind of available cash. Sometimes they're already doing it, but they're not communicating about it. There's one, name in the book that we have where they're basically just by holding it, you'd be earning a very high, double digit, call it a dividend yield of sorts, because it has a fairly, kind of small market cap, and it's using most of its cash flow to buy back its own token, right? And so I think we'll see. We have seen, let's say, green shoots of protocols doing buybacks, with different structures, etc. I think a lot of these protocols, once usage becomes, see some sort of underlying, strong underlying current and more stability, these protocols can become quite cash generative. And the question is, what do they do with it? And I think buybacks are, it can be incredibly accretive for us as investors. And so helping the team to communicate on that and say, this is what we're doing with the token, this is how we're doing it, with buybacks, for example, I think is, can be key to one of the key, components of our investment thesis.
So yeah, there's always conversation around fundamentals in crypto and what matters, what doesn't matter. Tokenomics though, like, do tokenomics matter?
A ton, I would say. They can really, as we've seen, right? I think um, a lot of projects come to market with a big supply and demand mismatch. And they typically launch on, kind of larger, let's say, infrastructure like L1s, right? Will launch on big venues, with multiple market makers, maybe supporting price or moving price in a certain direction, to put and I think we look at those and say, well, in some cases there's a real team, there's not like product, but clearly kind of we need to wait for it, the supply and demand mismatch to kind of fizzle out, and then there might be more efficient prices, or it might be an interesting time for us to get involved, right? And I think we have the luxury of doing that as liquid investors. So sometimes we see, a great product or a team that we like to invest in, but it really does not make sense for us to invest at TGE. And so there are many such cases where we've ended up investing maybe, 2-3 years out, post TGE, sometimes at prices, at or below seed level. And it's, a great opportunity, because only then I think you've de-risked the investment from a, supply and demand from a tokenomic standpoint. At the same time, there's been a little bit more progress on the product side. You maybe have some raw metrics that you can start to, kind of base a fundamental thesis on, and so you're in a really good spot. But I think tokenomics, as I mentioned earlier, ultimately, if our models aren't giving us a what's it, on a price per token, we're really missing a beat, right? And I think that if you don't take this into account into um, your forecast, your calculations, you can get burnt real badly. I think there's a big, a lot of the tokenomics are a lot of teams have way too complex tokenomics when it comes to various incentive programs, emission schedules, etc. Um, and it may all be there, the information in the docs, but you really need to be, I think I'd say that the docs are readable to most kind of institutional investors in crypto. But if you're not in that bucket, if you're a retail investor, for example, um, very difficult to kind of get any sense of what's going on. And I think um, you know in a market that's up only, nobody cares. And if that's not the case, then you run into, well, we see retail basically getting burnt and shifting to meme coins, right? So there's nothing to calculate or understand there really.
Totally. Okay. So, all right. So let's say that you have a magic wand and you can now say, "Hey, everyone, this is the ideal tokenomics that I want everyone to follow, and you guys have to follow it." For example, it'd be like, I'm spitballing, but like, all right, launch with 100% of your or 95% of circulating supply on day one, and every quarter you have to take the revenue, you have to take 50% of revenue and buy and burn your token or whatever. I'm just making it up. What would be the ideal if you could design this?
I think it is a little bit product or protocol dependent, but let me give you a slight tangent on this. I think that I'm not saying, so I think what we've seen is some of the issues have been, kind of the low market, low float, high FDD phenomenon has been part of the issue in terms of how crypto prices or specifically altcoins have evolved over time. And I think that launching with a larger supply on TGE can kind of mitigate some of those problems. Um, but I think not necessarily. What I would say is we, in essence, need to go back to doing ICOs, where you have a project that maybe raises money once or twice in a kind of private venture context, and then it does another kind of public IPO round, really, where there's a bit of a book building exercise, and you allow institutional investors like us to kind of set a price and decide to get involved or not. And I think you then have the ability to build a long-term investor base of of people that are comfortable holding your token and the associated risks in a public market context. Because a lot of venture investors, once a token gets listed, they're not set up to manage a publicly listed position, right? And so they are typically sellers, especially if they're up a huge multiple. It's kind of their fiduciary duty to say, well, we need to offload this. And I think that kind of screws up dynamics in the public context, and also kind of can disincentivize a lot of more participants like us to get involved, right? Because it's tricky. And so if there were a way to sort of have a more structured round for uh, institutional liquid market participants to get involved at or around TGE, I think that could be a big driver of kind of more sustainable token prices over time.
What are your thoughts around on-chain governance and DAOs? Because I feel like, at least this is my personal opinion, and this is not always the case, but in general, it's like I came into it like, oh my gosh, DAOs are amazing. I know on-chain governance is incredible. And then I don't know, over time, I got kind of jaded because I'm looking at, okay, a lot of these DAOs are actually just like spending money, like the US government, just like totally irresponsibly and like them things that like don't matter. And there's ways to kind of, you know, um, change or sway the votes in ways that are helpful to you. And it's like a lot of things going on that are very human versus the idealistic way that I thought, or that I wish DAOs would actually operate. So I guess, what are your general thoughts on DAOs and the on-chain governance? And do you guys involve yourself in any sort of investments around the kind of governance aspects of protocols?
Yeah, I think if I go back to my time at Target, there were a few positions where we were heavily involved in the discourse on the the governance forums, and we try to influence strategic direction and those kind of things. And I think that's definitely a strategy because you can. There's a bit of a you know a governance an arbitrage effect, right? Where depending on how active the community is, you can have an outsized influence by just posting kind of reasonable ideas on the forum and getting them through through the vote and getting them approved. But I'd say if I look at the portfolio today, there's uh, a lot of the assets when we initiate a position, there isn't a proper kind of DAO or decentralized governance setup. That's something that's kind of in the pipeline, and we're very happy for it not to be there because I think in the very early stages, it's incredibly unrealistic to have to decide on protocol direction, et cetera, through a DAO, right? And so I think we we look to projects in terms of we try to understand how they're thinking about it and how they're looking to set things up. We take a view on that more so sometimes on the structuring side of things, right? Like how do you need a limited company that interfaces with the real world. Where do you set that up? A foundation company? Do you in Cayman or maybe in Switzerland, those kind of things. So we have quite strong views there, and I think we were quite helpful on that front in helping the teams set those up for success. Um, and and I think that specifically like getting involved in the forums, it's something that is really pertinent to, I'd say, what I call like kind of the mid cap assets. Take a Lido, for example, that has been around for a few years and kind of maybe needs new impetus and has large treasury, so can actually do things with it. But that's not our sweet spot today. Again, we're slightly earlier stage. Um, and in terms of like maybe your question, I think may have been also like, what do you think of DAOs or decentralized governance in general? Is that like
Well, yeah, because I went into it so starry eyed and like, so idealistic and like, wow, this is going to be great. Turns out that, corporate structures are actually very efficient and work quite well for a reason. Like there's a person on top and, they have the managers and it's kind of like, command and control economy, but you kind of need that for things to move quickly and efficiently versus a DAO. It's like, man, we're going to have 50 people who have tokens like vote on this. Like this actually isn't, efficient at all. And there's a lot of room for kind of some grifting here and some other sketchy things. So, I guess from a philosophical perspective, what are your views on on-chain governance and DAOs?
Yeah, I think the idea is nice. Does it work in practice? I think we've seen very positive externalities and in ways that DAOs can do good. Make rational decisions and some very bad ones. But to your point, you mentioned corporates, right? I think we are moving to a world where we'll have corporates issue a token, for example, and so there'll be a token with some kind of value accrual story around it, uh, backed by kind of a centralized corporate decision making. And how does a DAO compete against that from an efficiency standpoint? I think that's tricky, right? So question is, will protocols that stick to kind of a true decentralized ethos, like protocols in the app layer, so not a kind of infra like base layer stuff, um, can they survive in a fully decentralized manner? I think that that's a question we have to ask ourselves, right? Especially if they compete against corporates.
Can you describe a great investment that you've made in the past? And you can obfuscate like the return and the name if you want. I also don't know like what regulatory regime you're under, so I don't know what you can and can't talk about. But are you able to kind of walk me through like, okay, we found it on through a friend that on Telegram, and then we did a research by talking to the team, and then we decided to make the investment, and then we exited after a 5x, or you don't have to say the number, but like, can you walk me through that good investment?
Sure. I think so. A, a fairly well-known DeFi protocol that was hacked for fairly large amounts, and token price cratered. I think 75, 80%, went to sort of below seed round levels, and so that was an opportunity for us to sort of do the work, understand uh, what the team stood for. They had fairly quickly come out saying, "We're going to build V2. We're here to stay. We're in for the long run." And so we had, the time to be able to do that work, analyze that, understand how are they going to go about building V2, and how this time it wasn't, going to get hacked, for example. Um, and so we were able to buy the token at, I think a double digit discount to kind of their last or their seed round. Um, and and then it's especially in crypto. It's a game of patience as well, right? I think sometimes our patience gets tested because we're operating in liquid markets, and so price goes up or down, and all of a sudden you're very quickly kind of enticed to sort of making short term decisions. And so I think there for us it was a real test of patience because V2 took a lot longer to come out than initially communicated by the team. We were in very regular contact with the team, but you know how things go. It's like, yeah, we think, next month, and then next month becomes the month after. And I think, you know, again, you have a token, but these are not regulated markets. So they're not bound to sort of, they have internal deadlines, but if they don't stick to them, it's fairly inconsequential. Let's say from a regulatory, definitely from a regulatory standpoint. And so there was sort of seeing them through, and I think V2 is today has turned out to be a great success. They're sort of a top three in their vertical in DeFi, and so that's an example of the opportunity set that exists in liquid markets, right? Where um, a token goes all the way back to seed level prices. You have the time to do the work, engage with the team, and then you sort of you have to stomach the volatility, right? That's the cost. Because token price will go up or down for kind of no reasons related to the particular fundamentals of the underlying business, right? And but if you can hold it out, if you have if you can stay rational longer than if you can stay solvent longer than the market can stay irrational, you have a chance at making a decent multiple. And so I wouldn't say that one today is like a it's not a 10x, but it was a very decent return for us.
Amazing. Awesome. Okay. So that was an example of a great investment. Can you give an example of a challenging moment that you've had while running Florin?
Multiple. I think any time the market decides to the altcoins sort of go minus 30 or 40% in a single day or sometimes over 2 days, it's tough. You and you don't really get used to those moments, I think, because they're so extremely violent. You build up some kind of, I guess you build up a thick skin, some kind of fortitude to kind of stick to again, cut through the noise, go back to kind of the original, the reasons why you're doing this, why you've invested in these particular assets. Um, but it's I think with every big um Six Sigma event, it always it leaves its scars. And so I think over time you kind of need to you need to actively deal with that, right? It's you can you build a certain resilience, etc. But you have to actively um, nurture that capability, right? And I think the stress and psychology that comes with it. So sorry, I can't give you. I don't know that I can give you like a very specific moment. But I think there were multiple points in time, let's say, over the last year where uh, markets for kind of retraced in a very big way. And I guess I'm always trying to. I came into this space as a super naive TradFi investor, and you think with every kind of event or with every quarter you learn something new, you become less naive, and then the market can sort of surprise you over and over. And so I think it's sort of being okay with that to a certain extent. And um, yeah, and being, keeping conviction and knowing why you have that conviction.
It's like stomaching the volatility and continuously learning and being a student of the markets and trying to adapt and build stronger every time. But yeah, no, I agree with you. I mean, so I know you've been involved in crypto for a very long time, and for myself, it's 2013, and it's like the early days when it would drop 30, 40, 50%, you would just, I mean, at least for me, I would be like, oh my gosh, like it's all over, it's finished. And then now it's like, oh man, that really sucks. You have there's no questions around whether or not the market or crypto is going to like be a thing. Because early on, I was like, oh, I think it might be finished. I think it's all like pack it up. And now there's just no questions of that. But it's still painful. There's never a period where it's down 40%. You're like, well, this is fine. It's like, that really hurts. But we have to just keep on as you said, have that conviction and moving forward. So very cool.
Yeah.
All right. So when you're building out Florin and you're thinking about hiring and just team members, what type of skill sets are you looking for? Because a lot of folks I talk to and a lot of other managers, they either come from TradFi or they come from tech backgrounds or they're just like crypto natives. What do you look for when thinking about team building and just partnering with, you mentioned James, your co-founder, just people that you want to work with?
Yep. So I think um, I think first and foremost we're looking for character traits more than we are specific background in, let's say, TradFi or crypto. So someone that fits nicely into the team, you know, subscribes to the culture and how we want to run the business. I think given where we are with the fund, we started it over just over a year ago. Building a fund is a fairly entrepreneurial endeavor, and so you're kind of running a fund, learning along the way in terms of how to deal with the crypto markets and strategy, and at the same time you're building a business, and trying to raise money from LPs. So I think we always looking for someone who kind of wants to dive into an entrepreneurial adventure. And then in terms of specific background, I think James and I have gone back and forth on that a lot. Today, so Florin, who lives in Paris, works with us. He has uh, a VC background, and I think he very much approaches the market in that way. And his skill set, he is incredibly. He's a very good communicator, I would say, or someone who likes to talk to founders, builders all day long, and that's definitely kind of a skill set that we could use in our business today as we kind of look for we're in the trenches, right? That's how we find kind of new protocols, how we find things that are not on other people's radars, and so that's I'd say one of the skill sets that we really need today. But other than that, it's always looking for people with integrity and a very strong work ethic. And I think the rest can sort of be taught on the job. Um, and we've gone back and forth as to, are we looking to hire someone with a profile more similar to what James and I have done, kind of former banker, former consultant. They come in, they've been drilled, right? So they come in with a certain, work ethic and a certain standard of delivery, which, I would appreciate a lot because I, went through the same. And so if I don't have to sort of completely redo someone's model, because they know exactly how to, how to present it to me in a way that I can just look at it and don't have to ask any questions, that's great. But equally, you might be missing out on, certain other facets of, our job. And I think part of the challenge is that crypto investing is multifaceted, right? We're doing venture in liquid markets. We're talking about macro regulatory risk, um, and all the kind of, and in the meantime the technology is evolving, right? So you kind of need to be on top of, you need to have your finger on multiple different buttons. And so I think we are budget constrained, so we can't hire kind of a 10 people team, and we would never want to, right? I think we want to remain lean, very focused, and a situation where the founders themselves are still heavily involved, right, in the day to day. whether it's asset selection, portfolio management, risk management, etc. So that's that, and I think as we grow, um, we will be looking for probably people with a fairly orthogonal skill set and background. For example, hire a dedicated trader. That might be interesting. Today we do all the execution ourselves. Luckily, we don't trade every single day, so it's. But as the fund grows and the amounts get bigger, we could see kind of wanting to hire manpower on that front.
Very cool. All right. So speaking of the future, 10 years from now, 2035, we're on the pod again. You're coming back for the 10-year anniversary. Where's Florin?
Multi strategy crypto investment platform. So I think we started off with we have today kind of our liquid venture approach, and I'd very much like that to be kind of our flagship product. That kind of cements our rep in the market. But it's definitely not the only product of it out there in crypto, and I think so being able to offer different products with different risk reward and risk parameters to kind of our investor base is definitely a goal we're working towards.
All right. So I want to move a little bit towards like macro questions and get just your general take and vibe on the market currently. So how do you imagine crypto is going to be adopted going forward? My thesis was essentially that it was going to happen through fun-friendly use cases like gaming and NFTs and these fun things that are low stakes use cases that people will enjoy and have fun with. And then now, it seems like, okay, crypto and I think it's really has to do with wallet adoption and complexity around wallets and dealing with keys and everything and just like the annoyingness of transferring Sol or ETH or whatever. And now I'm like, okay, well, until we have ubiquitous wallet infrastructure, I actually don't think that's gonna happen until we get that infrastructure, which is coming, but it's gonna take some time. And now I'm seeing, I just had Digital Asset Summit in New York, great conference by the way, and it's every institution you can imagine was there. So I'm like, okay, actually, I think it's not gonna be friendly use cases. I think it's gonna be more institutional side. So, anyways, that's kind of my thought process on the first applications and kind of real inroads to the regular world of crypto are going to be on the institutional side. What is your take? How will crypto be adopted?
Yeah, I think in crypto we often talk about kind of onboarding the next billion users or something. And I think if we could get to a situation where we no longer have to go through that step, right, of having to onboard someone because the tech is running seamlessly in the background, right? Um, my partner James would say like Venmo isn't onboarding a new person, right? It's just like it's an app that kind of meets your needs and fits in your kind of day to day, and it's very easy to use, right? And I think we need to get to a similar situation with crypto. We look at we measure progress in terms of on-chain capital, on-chain usage activity, etc. But the sort of on-chain to off-chain that transition should become seamless. And I think if looking at a lot of the discourse today, you mentioned institutions earlier. I think they are that is definitely a very positive development because the argument they were previously using, which was there isn't enough regulatory clarity, I think is definitely out the window, and so they're now sort of scrambling. But I think they're institutions, right? So it's going to take time for them to get their ducks in a row, and I think they are focused on mostly on tokenization opportunities and stablecoins and how stablecoins can, kind of integrate or basically, replace, traditional payment systems. And I think, to answer your question, how does crypto become ubiquitous? From a B2C standpoint, I think payments could be, having a wallet, which on the back end, kind of, uses crypto to pay for items, merchants, etc. Could be one of the best onboarding mechanisms to sort of other apps that you might use in your day to day. But it's a good question. I think the industry has gone back and forth in terms of it's all about BTC. It's all about apps to going back to well now we have a regulatory tailwind instead of a regulatory risk, and so how can the institutions drive this? But I don't have like a super strong clear answer for you. I think if we look at what we do with the fund and what we're focused on, or what we talk about to LPs, it's definitely kind of the regulatory and the institutional elements, right? We are, in contrast to yourself, less, focused on consumer apps. And so I think for us, if we can get large banks to sort of integrate, you know, DeFi infrastructure, I think that's humongous.
Yeah. So in terms of the fundraising, how has that been for because previously, at least in the states, we had the Biden administration, which was pretty anti-crypto, and now we have Trump, which is pretty pro-crypto. It seems like. I mean, he's doing some pretty crazy moves, so we'll see. Um, have you noticed a shift in fundraising since the election of Trump, or has that not impacted you at all whatsoever in Europe? And in addition to that, the conversations we're having, at least, it's either uh, to a potential LP. Yes, I love crypto. Would love to talk more. To I absolutely hate crypto. It's still so bifurcated. Have you noticed any change in that, at least over where you're talking to folks?
Uh, definitely a few prospects that or leads that I thought were dead, kind of came back to life in the course of Q4 last year, Q1 this year. I think people are it's this, you know Gen AI came about, right? And there's been, and it's there, and we know it's here to stay. And I don't think there's no sort of, bull and bear market concept in AI and Gen AI as there is with crypto. And so AI people were, it came out a little bit. Gen AI kind of, GPT-4 or GPT-3 came a little bit out of the blue, and then people had to ramp up, their knowledge on this thing, and get involved. And with crypto, we've had bursts, right? In terms of, we've had, bull markets, and then you have a headline. People are like, oh, I should understand more about this. And I feel like, but 12 months later, we sort of, we went into a bear market territory. And so, they were too lazy to do their homework, and they're like, oh, but it's okay because Bitcoin has dropped 50% again, so probably means I don't have to spend any time here. And so it's been this asset class, this tech, right? It's been sort of coming back, right? Every once and so often, it's like, oh, I need to do something with this. And I think we are now finally, hopefully, getting out of this. I think the historical sort of 4 year, kind of halving cycle, and the bull bear that was driving off of that, to something more sustainable, more gradual. And I think something that will, force people to the table in terms of, understand that, this is not, you know, uh, money for, the dark net or for criminals. And, it's really infrastructure. And my conversations with LPs in Europe mostly, they get their info mostly from, mainstream media headlines, right? Mainstream media headlines talks about, Trump meme coins, Bitcoin price going up or down, and scandals, crypto scandals, right? And so I think, in fairness, right, if you get, it's not a very enticing kind of investment opportunity, when you get your info just from that. And so, I spend a lot of time, sometimes debunking still the old myths around, Bitcoin is for criminals, or it uses way too much energy, or it's just a, or meme coins are just, well, they are a casino, but the rest of the space by definition is a casino too. And I spend a lot of time kind of debunking those myths. Um, and I think that takes time. If you look at, the average European LP compared to, their US counterpart, they're more risk averse. They're definitely not a first mover when it comes to, venture investing in any new asset class, right? I think, private equity has been around for, since the 80s. And so they invest today in, uh, B2B software, venture, and, PE funds, because that's what people do. And crypto is a brand new asset class, that I think fits very well in many portfolios. If you size it appropriately, and having those conversations, I think, yeah, it just takes time. Um, so we've seen a pickup in interest for sure, and I think for good reason, because there's good reason to be excited about the space. If you just look at all the regulatory developments in the US over the last, I mean, it's been way more. It's been way above expectations in terms of the speed, right? The announcement by the administration, the lawsuits being dropped. I mean, multiple things to be incredibly bullish about. Um, but then again, I think there was a bit of a correction, a market correction in in the last few weeks, and that's what ends up in the newspaper. Especially in Europe, right? People don't read there will now be constructive regulation for crypto in the US. They read there will be no regulation, and you know, uh, as sort of conservative Europeans, that scares them, or that they don't like the idea per se. So I spend a lot of time, kind of, I guess, educating LPs, and because ultimately I believe, and we are seeing, right, we are seeing people, kind of making moves, taking positions, very in a very measured way. Still, tiny percentage of their overall portfolio. It's kind of a kind of a look along ticket, or whatever you want to call it, for them to learn. And I think that's the way to go, at least in Europe, for now.
Amazing. Feyo, this has been incredible, but it's time for the closing questions.
Go for it.
All right. What is the best advice you've ever received?
Don't be humble.
Sorry, you said don't be humble?
Yeah.
Oh, tell me more. Don't be humble. Interesting.
No, and by that I don't mean be arrogant, by any means. But I think, I grew up in Europe, where my kind of education, my upbringing at home, where we Europeans are conditioned to sort of be modest, and not try to sell something to someone, not oversell ourselves, not overstate things. And I think that has sometimes been a blocker in my personal development, especially when I started. When I became an entrepreneur. And so for me, that's been a big, psychological unlock to sort of be more forceful about what I stand for, and not be afraid of having, ideas that are out there for a lot of people, right? And so I guess maybe, being a contrarian. And I think if you are a contrarian, which I am to a certain extent, by spending 100% of my time in crypto in Europe, you have to be you have to get your message out there, and by being, maybe I said, maybe you could replace the word humble with balanced, right? I tend to be very balanced and measured, because I think that's what people will appreciate. It's like, there's a great opportunity here, but here are the risks. And really, that is not always conducive to sort of growing a successful business. And so for me, it's been a great personal learn to sort of sometimes bang my fist on the table and say, this is what it is, and you better come along for the ride.
Love that. That's amazing. I love that. Incredible. All right. So what trend is totally overhyped and what trend is underhyped?
People being bearish is overhyped, I think. We have the biggest divergence between fundamental progress on the regulatory front, and the timeline on crypto Twitter. So I think that's and we might see now. I think for about a week we've been in more constructed territory, from a market and a capital flow standpoint. Most underhyped. I think if you look at a lot of the AI names that we focus on, are in kind of deep underwater territory, and so again, I think it was a hype at some point. Like every new narrative is a huge hype in crypto, but I think there's something real under the hood there, because at the end of the day, blockchains is an environment where everything is digital, and so are sort of agents' natural habitat, right? Everything that an agent is supposed to be, i.e., how can we make it, more agentic and more autonomous? I think a blockchain sort of offers, kind of the natural, or the tools for an agent to be exactly that.
Very cool. Very cool. All right. What piece of content, whether it be a book, blog, TV show, etc., had the biggest impact on you?
Well, something that I read, on a recurring basis, Howard Marks' investor letter. Um, if I could have his clarity of thought in terms of how he sets out socioeconomic, events that happen, today, right? And he typically is always able to sort of link it back to something that happened in the past, and as we know, kind of history tends to repeat itself. That's been it's definitely it's not a crypto focused letter at all. But I think there were a lot of learnings for any investor in there, and it has helped me sort of uh, to ground myself in, okay, these are the reasons why I'm an investor, and these are the reasons why I'm investing in crypto today. And again, going back to kind of our earlier conversation about how do you cut through the noise and distraction, going back to those core principles and having them in the first place, so important, I think, if you want to survive in this industry.
What does success look like for you?
Yeah, I think I go back to our earlier discussion about how does crypto become ubiquitous. I think it's I love the educational piece. I love telling people, being telling a bit of an eye-opening story, right? And saying, oh, this is actually it's new info for the internet, rather than it's a meme coin, or it's or it's a coin for criminals. And I think getting as many people over that hump, getting comfortable, and seeing the light, see the stuff that you and I see, right? Because I think this technology is so incredibly powerful, but it's being done wrong by kind of most a lot of the reporting in the larger outlets. And so if there was an ability for people to kind of see that light in a very big way, I think that would be a major win.
Amazing. Awesome. Feyo, thank you so much for joining me today. It was awesome chatting with you. If people want to find out more about yourself and learn more about Florin Digital, where should they go?
Yeah, I post occasionally on LinkedIn. And we have a blog at florindigital.com/writing, where you can find a ton of articles, and there are some contact details included too. So happy to engage with anyone interested.
Amazing. Thank you, sir. Talk soon.
Thank you, and thanks, Andrew. Cheers.